And in today's episode of Obvious Things Are Obvious, check out the title, Tesla's next generation vehicle will take the company to the next level. Indeed.
You lowered your price target on Tesla. You still have a buy, but you lowered the price target. New price target 234, it was 267. You still see a more than 20% upside in the stock. But I want to ask, why did you lower the price target?
Well, look, the quarter itself had some puts and takes. There was a small improvement in what we call pure auto gross margin, a slowdown in energy storage growth. But the real story was a lack of pinpoint guidance for 2024 unit sales.
I love this, bro. The Wall Street analysts are really struggling to handle the lack of guidance from Tesla. And a lack of guidance from Tesla, as in a lack of spoon feeding from Tesla, forcing analysts to do their own thinking creates uncertainty because they have not been spoon fed numbers to stick in their spreadsheets. And if there's uncertainty, well, uncertainty is bad and therefore time to panic sell and or reduce price targets and or be concerned.
Like you said, the company talked about a slowdown in growth as it finds itself between growth waves. And our note to clients was a call for patience. We called it a time to bide time. Tech adoption curves are never smooth, Frank. You have slowdowns and accelerations in growth, and for some over the last 100.
Now, this is actually an important point. It's impossible to predict the exact slope of the curve in terms of the adoption of electric vehicles, but we do know the approximate shape it's going to take. It's just very hard to know at an extremely granular level. But over the long term, the slight kinks and variations will become irrelevant blips. Just wanted to rewind the clock quickly. Just over half a decade ago, with the latest available information ending in 2017, what we were looking at was electric vehicles as a percentage of all new vehicles sold. Now, I do presume this includes fake electric vehicles, ICE vehicles with a vibrator-sized battery, also known as hybrids. But regardless, 2010, basically 0%. 2011, 0.07%. 2012, 0.17%. 2013, a quarter of 1%. It wasn't until 2017 that the 1% threshold was breached. Now, you'll note the growth rate here along the bottom in percentage terms is volatile. From 2011 to 12, there was a 162% year-over-year increase, but then just 58% in the following year, then 53, 68, 42. Oh no, it's the end of the world. 65, the 48% year-over-year increase from 17 to 18 based on a forecast of electric vehicles making up just under 2% of all new vehicles sold. In reality, just over 2%. But then the end of the world, from a 65% year-over-year increase to just 9%. At this point, a lot of people panic. It's all over. There's no such thing. Electric vehicles aren't happening. It was a fad. They're going away. The ICE vehicle's here forever. Then we see a surge from 2.5% to 4.2%, close to a doubling year-over-year. And then close to another doubling in the following year to 8.3%. And then from 8.3% to 13% in 2022. Again, if we delete the fake electric vehicles known as hybrids, a little under 10% of all new vehicles sold in 2022 were electric. But note, this isn't a completely smooth curve. There are kinks along the way. It's hard to predict exactly at a granular level. But over the long term, it's pretty clear we are seeing an exponential increase in EV adoption. Here's what a perfect S-curve looks like, without any kinks, which, funnily enough, based on the data we've just looked at, maps quite closely to what's currently happening. 2022, roughly 10%. Pretty close. So, while it's impossible to know the exact shape of this curve over the short term, play along at home and just imagine that something roughly like this occurs. By the end of this decade, give or take, electric vehicles likely to make up roughly 90% of all new vehicles sold. Maybe 80% in the worst case. So, to George's point here, I think it is important to understand that if you're focused on too short of a time horizon, you may miss the forest for the trees. If this EV adoption chart ended here, you might think that we're in for a very, 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 very slow transition. 2.2%, 2.5%. Oh no, it's slowing down. But then, out of absolutely nowhere, rockets higher.
Plus years, you've even had a reduction in penetration during times of economic stress. And we're now in a slowdown period growth for Tesla.
Okay.
Look, it's not great, but we're not long-term bears. There are way too many good things going on, whether it's next-generation vehicles, full self-driving.
I mean, George, in all fairness, I think you're actually a long-term bull. You have 20% upside for the stocks. You also pointed out gross auto margin, which beat expectations, but is still well down from a year ago. I do want to ask you, how did it beat expectations with Tesla cutting prices in China and cutting prices in Europe? Explain that for people out there who are Tesla investors, because that's...
Now, this is a good question for an audience of CNBS viewers who may not understand. A recurring narrative for many folks is that if Tesla cuts prices, the only possible outcome is that margins will go lower. This, of course, does not account for the fact that Tesla can reduce the cost to produce their vehicles, meaning that in theory, they can both cut prices and have higher margins, or alternatively, not cut prices and have higher margins, or another alternative, even more aggressively cut prices and maintain existing margins. This is an important part of the bear thesis that seems to be completely missing. I have said this trillions of times, but it's really important to understand. Tesla is focused on reducing the cost to produce their vehicles, and they've successfully been doing exactly that. Case in point on screen now, Tesla's cost of goods sold per vehicle. We've seen a roughly $3,000 cost of good per vehicle decline from Q4 2022 to Q4 2023. Give or take, that's about 8%. Now, assuming, and just real simple numbers here, if Tesla didn't cut prices at all, that would mean their margins were roughly 8% higher. Alternatively, this also means that Tesla could have cut prices by roughly 8% and maintained the same margins. Or maybe they cut prices by 5% and they've still got higher margins by about 3%. You get the point, right? This is how Tesla can both cut prices and maintain or even increase margins. They have a lot of flexibility here because they're so profitably producing vehicles and doing so at a much lower price in terms of their cost to produce than anyone else. And the cost declines won't stop here. Part of this could be commodity prices, but also part of this is innovations in terms of manufacturing, new efficiencies, deleting parts and processes, improving thermal management systems, giant castings, blah, 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 blah. We are, however, going to see a step change in cost to produce goods with Tesla's next-gen vehicle platform. Tesla is beginning to see diminishing returns on the current generation of vehicles. Not to say that cost declines won't continue, it's just that we are going to see a huge reduction in how much it costs Tesla to produce a vehicle with the next-gen manufacturing platform. Totally new way of putting together a vehicle.
That's such a key metric.
Sure, it's a really good question. It was a very marginal beat relative to expectations. And if you recall, over the last several quarters, we've seen margins come down quite a bit. So we've bottomed, it looks like, but it was a very small bounce. We actually think that in terms of upside catalysts, call it over the next 6 to 12 months, we may see a more material improvement in margins because we don't think the company is going to cut prices as much as they have over the last several quarters.
All right, two big questions. Again, your price target is 234. You see a 20% upside over the next year for this company. Before, the estimates were for 20% growth in vehicle sales. Tesla said it's going to be notably lower. Give us a ballpark figure where you think that's going to be. And what's going on with this next generation new platform vehicle? I mean, how optimistic or not optimistic are you about it? I'm hearing some people say it's supposed to compete with like a Honda Accord.
Yeah, totally. So we see vehicle sales this year in 2024 of 2.1 million versus 1.8 million in 2023.
For what it's worth, that's probably a relatively reasonable estimate.
And with regard to the next generation platform, we think it could be a very, very big deal. It's the car that's going to get Tesla to its long-term goal of about 20 million units. And they just did 1.8, right? So that's
facts, brother, facts. I think that Tesla's next generation vehicle is breaking a lot of people's brains because what will occur is unprecedented. Today, the best-selling vehicle, which funnily enough is a Tesla itself, did just over 1.2 million units. Historically speaking, in any year, world's best-selling vehicle will roughly sell around 1 million units and do so with a purchase price of a fraction what Tesla's Model Y is currently selling for. Yet somehow Tesla's Model Y already now outselling any other vehicle, any other car on the planet. Stunning achievement. Tesla's next-gen vehicle is going to be significantly cheaper. And as George points out, it's going to be the platform that allows Tesla to reach their long-term goal of 20 million vehicles sold per year. Now, I personally suspect there'll be a few different variations of this vehicle platform. For example, the Model 3 and Y are both variations on the same platform. I suspect the next-gen vehicle may have 2, 3, 4, 5, maybe different variations. It's going to be more compact than the 3 or the Y, in my opinion. It's going to have a few features stripped out, but it's still going to be a great, compelling vehicle. May have a hatchback version and a few variations for different regions, tailored to certain markets. Each variation within this vehicle platform itself could sell multiple millions of units per year. In fact, just a few variations on this platform, in my opinion, over the long term, will sell more units per year than entire companies like Toyota and Volkswagen at 10, 11 million units per year ever did, with many dozens of vehicle models. This is going to give Tesla an absolutely unfair advantage due to the enormous economies of scale and lack of complexity within their business.
A lot of growth going forward. And we think that's going to be the mass market vehicle that takes Tesla to the next level.
Makes two of us. And now why 2024 will be a tough year for Tesla from an ex-Tesla board member.
Our next guest saying when it comes to Tesla, he doesn't always agree with Elon Musk, but he made the company what it is. Let's bring in a former Tesla board member, Steve Wesley, to discuss. Steve, always good to have you. You've been positive, and rightly so, for quite some time on the company, on the stock to a certain extent. But I do wonder, after listening to yesterday's call, obviously the competition that has come to the fore, the price cuts, the lack of any real catalyst in 2024, seemingly, where you stand right now.
Well, look, let's give Tesla credit where credit's due. They've just posted not one, but 3 consecutive great years. They grew 71% in 2020. They grew 51% in 2021. Last year, 19%. Those are great numbers. The challenge is going to be 2024 because they're in between new product offerings. The Model 3, Model Y, phenomenal successes. Model Y today, the largest selling vehicle in the world, gas or electric, stunning. But what about 2024? What they really need to catch up growth-wise with the BYD that grew proportionally 70% last year, delivered 1.6 million vehicles to Tesla's 1.8. They're going to pass Tesla this year for sure. Tesla desperately needs to get that $25,000 model into market by late next year. So for this year,
For what it's worth, that is Tesla's aim. Whether or not they get there, time will tell. But it is important, and I mean really important to understand. Tesla's next-gen vehicle platform is specifically designed to be not only cheaper to produce, but significantly faster. The two kind of go hand in hand. This is important. So a lot of people are going to be using how quickly Tesla's ramped previous vehicles, how quickly other companies can ramp other vehicles as a benchmark for how quickly Tesla can ramp and scale production on the next generation vehicle. This is a bad idea. As I've mentioned previously, VW admitted just a year or two ago that Tesla was able to produce a vehicle 3 times faster than VW could. Just imagine a company producing electric vehicles 3 times faster than you. That's a scary proposition. And that was Tesla's Model Y. Tesla's next generation vehicle with the modular manufacturing system will be meaningfully faster to produce than the current generation. Not just a little bit, but a shitload faster. So whether production begins to ramp in late 2025, early 26, mid 26, late 26, the exact time this starts is pretty meaningless. How quickly production scales globally. Again, Tesla confirmed, first going to occur in Austin. They'll take the learnings from Austin to Mexico and be looking for and announcing another factory somewhere outside of the United States, probably later this year as well. So this thing is going to be ramping in at least 3 independent locations at lightning pace. And assuming we don't have another round of production hell, is going to ramp at an absolutely stupid rate. So maybe a few years where the numbers say BYD outselling Tesla with global electric vehicle sales. But once Tesla's next-gen vehicle platform is pumping out, ramping up globally in multiple locations at the same time, all bets are off. I personally think we're going to see an absolute surge. And I'd say somewhere around, let's call it 2027 or so, folks like Moron Stanley are going to be incredibly embarrassed that in 2024, they were expecting Tesla to sell just 7 million electric vehicles in 2030. I don't think they're accounting for the next-gen vehicle platform, nor how fast it will ramp, nor how many units they'll actually be able to sell. But to Steve's point, over the short term, Tesla's definitely between 2 waves. I mean,
they've got 3 shots on goal here that they're telling analysts. The first is the $25,000 model, but how soon can you get that out? The second is they're clearly a leader in autonomous driving, robo-taxis. I think that's at least 3 to 5 years out. The interesting play that few people talk about is the Tesla Energy division did $6 billion this year. It's growing at 54% a year. They're working on being essentially the world's largest utility.
Important context, Tesla Energy, among other things, definitely flying under the radar. Typically, this is not a consumer-facing product. They do have the home batteries, but most of Tesla's revenue from the battery business is coming from commercial customers. Big purchases in the multiple millions of dollars. Now, Steve just mentioned some round numbers there. Did $6 billion this year, growing about 50%. Let's do something fun. Let's just imagine hypothetically that Tesla's energy business were to continue growing at 50% year over year until the end of this decade. That would mean that the business would do about $100 billion of revenue in 2030. Just the energy business. But what if instead of until the end of the decade, it grew at that rate for just 10 years? We're now looking at about $350 billion in revenue just from the energy business, which is more than 4 times Tesla's entire automotive business as I record this. Now, that's not to say that the energy business will continue growing at that rate for that period of time, but just to illustrate the fact that something that's growing at this kind of year-over-year rate, already from a massive base, $6 billion in revenue, Probably not a good idea to ignore this, at least if you own Tesla stock.
That's an interesting play. Those are numbers most auto companies would die for. But 2024 is going to be a tough year. Tesla's going to have to execute on everything they do, from opening the plant in Mexico to getting the plant in India built to selling some more Cybertruck. It's going to be an interesting battle, and the Chinese are coming.
Yeah, the Chinese are coming. BYD has an automobile out there that is a real competitor, not just in the Chinese market, of course, but in Europe as well. Probably never going to be here. So I wonder, are they up to it? Do you think that, again, that timetable, Musk has typically been optimistic when it comes to the timing of things and sometimes wrong. Do you think they can get there in terms of that model you're talking about to make them competitive as soon as the end of next year?
I think they'll get initial sales out by then, but they need to do better. Here's the big picture most investors don't fully understand. We're living in an international world. Tesla dominates the U.S., 51% market share, more than everybody else combined. But we're now the second largest market in the world after China. China sold 8 million EVs last year. All of Europe together did about 2.6 to 3 million. US and Canada did 1.6 million. So where do you want to be number one? China. So US dominating, Tesla dominating in US, dominating, frankly, in Europe. But they've got to get out to that rest of the world, because that is where the money's being made. But there's one other issue investors need to look at, and that is, for the last 10 years, when it comes to EVs, it's all been about range and price. Now it's moving over to being about tariffs and privacy. Because as you point out, will Tesla and will BYD come to the U.S.? They're absolutely coming to the U.S. They're already selling buses here successfully.
I get the impression that Steve Wesley also believes there's going to be an invasion of compelling, well-priced, decently performing Chinese electric vehicles entering the United States, entering Europe and other parts of the world, eating the lunch of legacy automotive manufacturers. He ain't wrong.
They've started selling in Europe, but consumers are increasingly going to ask the question, do I feel comfortable driving a car with a Chinese IoT device that knows where I'm going, maybe listening in on me? That's a big issue. And then the tariff issue is another big one. U.S. needs to be careful on tariffs, because we may feel good with the 25% tariff we've slapped on, but there's a much bigger auto market in China than there is here. And if China reciprocates, we may think twice about that.
Now, Steve makes an interesting point here about consumers and whether or not they'll be comfortable to be driving around in Chinese-made electric vehicles that may or may not be listening in on them. Let me know in the comments below. Is this a bit paranoid? Does he have a fair point? Would you be comfortable driving around in a Chinese EV, not being 100% certain that your privacy is being completely respected? Is that even a fair perception? The way I will personally answer that question is just to point out that as I record this, I currently have tape over every camera on every device in my home. Really, want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.